Hello, welcome to Forex School Uganda. I am Godfrey. Today I want us to do a top-down analysis on the USD-CAD pair. That's the US dollar, Canadian dollar pair. To see where price is at right now and where we anticipate it to get to in the next coming few days. When you look at this, price has been ranging between these highs and these lows here. We can see it hasn't been able to break out of this range. Currently, what we see is that price came and retested this area here after originally breaking out of it to the upside. After price coming to this low of the range, price started moving up. When it got to this area, it hesitated a bit, dropped down a little bit, leaving behind a minor area of resistance before finally breaking out of it possibly to the upside to come and touch this top of the range. But we've also seen price retrace after touching these highs. It retraced, came into this previous resistance, now turned support, and with this bullish candle it was able to after touching this, it was able to close away from this support area. And now we see that with this new candle, the present candle that is running, it is trying to push to the upside, giving us the sense that this was an impulsive move away from this support area, and this was a correction, and now we are in the next impulsive move of the market to the upside. So this is the monthly time frame, and the bias is clearly bullish. So we'll drop down to the weekly time frame. Now on this weekly time frame, we see that price is also ranging between these highs and these lows here. We see that price moved into this level here, retraced to this point here, bounced off this support area back to the upside, touched this resistance area and bounced off down to these lows here. And now it's in the process of bouncing off this tested support back to the upside, and we expect it to come to the range high right here. So the weekly, just like we've seen the monthly, is also bullish as far as the bias goes. And now we'll drop down to the daily time frame to see what the structure is. So this is the daily time frame, and from this we see that price moved from the high of this range into this area, pushed up a little bit, then dropped again into the range lows, and away from this range lows it formed a double bottom from which it sprang to the upside, and in springing to the upside it left behind what we know as a W formation, and after W formation we expect a retracement to come and retest the neckline, which it precisely did with this bearish candle. So it pushed, came and retested the neckline around this area here, So this retracement was a correction to retest the neckline, but in retesting the neckline it left behind an impulsive formation in the market, which is a bullish formation, further solidifying our market bias as bullish. And so after this retest of the neckline, price has sprung back up, and we see that now this candle was able to break above the high of the previous candle, and the new one is now in the process of formation. Now we're going to drop further down to the lower time frame, that's at the 4 hour. The 4 hour is probably the best time frame for swing trading opportunities as far as the lower time frames are concerned. And then if you are more of a day trader or a scalper, then as a day trader you'd have to drop further down to the 1 hour, and as a scalper then you have to drop further down to the 30 minutes and maybe the 15 minutes for those early opportunities. But you do not just randomly execute in the market. No, you stay on the lookout. You see, the markets pay you to wait, and so you just stay like a sniper in the wait looking out for particular price patterns and candlestick formations to show up, to be able to inform your decision as to whether to buy, continue waiting, or to take sales in the market. But like we've seen, the higher time frame perspective is bullish, and so our bias based on the higher time frame perspective is also bullish. So we'll be looking out for bullish opportunities or buying opportunities for that matter. But we're going to drop down further to the 4 hour to see what it's telling us, because it is the first time frame that we go to for our swing trading opportunities, and we'll do just that right now. This is the 4 hour time frame. I want us to analyze it as well to see if it gives us the same vibes like we have received from the higher time frames. Remember, for our swing trading opportunities, this will be our execution time frame. Now, that doesn't mean that we are going to just randomly take buys. No, we are going to sit, wait for particular price action setups that we look out for that suit our entry criteria, and we will be looking to our trading plan to see if it meets the conditions that we consider before taking any executions in the market. And once we have all the points together, then we will seek to take whatever opportunities that come up in the market. So once again, this is the 4 hour time frame, and we see that this was a resistance area. Now price broke out of this resistance area impulsively to the upside, and now when resistance is broken, what happens? Resistance becomes support, and so that's what has happened in this case. Now this previous resistance has now turned support, and we are seeing price with these bearish candles retrace potentially to retest this resistance now turned support. And so we'll be on the lookout in this area here, looking at the price patterns, also the candlestick formations. We see that the structure of the market from the higher time frames is bullish. Now on the 4 hour, we see that price is coming into an area of support, and so we'll be seeing how price reacts at this area of support, looking out for particular price action formations for our confirmation of the bullishness, and then after that we'll be looking out for buy opportunities. But from the look of things, this is a potential breakout and retest. Now we are looking for, we want this area to hold, and after it has held price above itself, then we'll be like snipers waiting for those particular moments that we look out for to strike much earlier, and then look to ride this wave as the tide runs bullish. Also notice that this area to the left is a very clean traffic area. We do not have anything that we see that could potentially be an impediment in the price movement to the upside once it is able to hold its ground around this support area. So if you are able to get bullish closes confirming this breakout as real and not a fake breakout, then we'll watch to see what we can do to take advantage of the rejections within this area for early entries to capture the next move in the market to the upside. So I want us to look at what the big institutions like the big banks and the hedge funds are doing in the market to see what side of this market that they are taking, whether it is bullish or bearish, because we need a set of all these confluences to inform our decisions. And remember, you as a retail trader, you're just a small drop in the ocean. It's the big banks and the hedge funds that move these markets, that are, because they are managing billions of dollars, and so their positions are worth billions compared to your maybe tiny hundreds, thousands, hundreds of thousands, or maybe a few millions here and there. But these are managing billions of dollars. These are the funds, these are the people that move the market. I want us to see what their positions are by analyzing the institutional order flow. And to do that, we'll look at the commitment of traders data. This is data that these institutions are required by law to submit to the CFTC, which is the regulatory body in the USA. So this is the latest update that I have of the data, the COT data, specifically on the Canadian dollar. And remember, what we are seeing here is data on the Canadian dollar, but remember, every currency on the spot market is traded against the US dollar. So these positions are against the US dollar. So looking at the latest filing, see that these institutions have in the market 20,000 longs and 130,000 shorts. Now that means they are shorting more of the Canadian dollar than they are buying it. And remember, every action that is taken on this currency, the reverse action is taken on the dollar, because these currencies on the spot market are traded against the dollar. So if they are taking 131 shorts, these are sell positions that are being held in the Canadian dollar against the US dollar. That means they are selling more the CAD and inversely buying more of the US dollar, because the action taken on one, the reverse is taken on the other. And so we see that the long positions they have are just a minute 20,000 positions, long positions, compared to the 131,000 short positions. And so they are shorting more of this and buying more of the US dollar. They are shorting more of the Canadian dollar and buying more of the US dollar. And if you look at the net positions, it's minus 111,000. That's a huge negative figure against the Canadian dollar. That means the confidence in the Canadian dollar against the US dollar is running short. It is small. It is lost. And so they are losing confidence in the Canadian dollar, thus selling it, and gaining confidence in the US dollar against the Canadian dollar, and thus buying it against the Canadian dollar. So from the COT data, the institutional order flow, we see that the confidence is more in the US dollar, gaining value over the Canadian dollar, and hence the intent of selling the Canadian dollar high and buying the US dollar low. You see, just like any other business, you buy low, you sell high. And so they are shorting the Canadian dollar with the idea its value collapses against the dollar, and hence the buying of the US dollar while shorting the Canadian dollar. Back to our chart, we notice that the monthly is bullish, the weekly is bullish, the daily is bullish, and the institutional order flow also shows us that the big boys in the industry, the big boys in the market, are actually longing the USD Canadian dollar currency pair. This is the 4 hour. We'll be looking to see what kind of price action we get within this area and what price patterns will be forming as we drop lower for quick scalps in the 15 and the 30 minutes, day trades in the 1 hour, and obviously the swing trades in this 4 hour time frame, with our bias being more to the upside. And that's our analysis for the USD Canadian dollar. If you're new to the channel, kindly subscribe, like and share the video, and keep it here where you will be receiving more educational gems even once in a while. Help you in your trading journey. Leave a like, subscribe to the channel, and share the video.